of May. The Mpc meeting was yesterday, the 27th. And as usual, the governor is hosting you for a press briefing this morning. We will do what we usually do, which is we'll have the governor going through his entire statement, uninterrupted. Once he's done with his statement, we'll then come back, and I'll help to do that, is come back to you for Q&A. And like we said, you can ask whatever it is that you intend to ask, largely MPC-related issues, but also anything else that you feel you want to have addressed. So without further ado, I would like the governor to please take over his own meeting. Welcome, Governor.
Very good. Thank you, Alice. Good morning, everyone. And as always, we are delighted to be here to have this conversation. Following the MPC meeting yesterday. So as Wallace has indicated, I'll go through the various, let's say, a summary of the meeting yesterday and the underpinnings of the decision. And then we will talk about other things that, that catch your fancy. So in terms of the conjuncture, the economy is at, or continue to strengthen, particularly the domestic economy. The outcomes for 2018 were much stronger than maybe was projected by some of us. But at the same time, there has been a worsening of the external outlook. So yes, we have favorable outlooks, but some of the downside risks are now materializing. So I'll go through, in a structured way, the various aspects or sectors and explain them to you. In terms of inflation, April inflation, overall inflation was 6.6%, which was an increase from the previous month at 4.4%, reflecting higher food prices, in particular vegetables and other fast-growing crops, following, let's say, the delayed onset of the long rains. So the long rains were delayed at the beginning, and this led to a surge in prices of commodities, food commodities. But now, obviously, we are not talking drought like we had in 2017. It's important to make that point because the rains have arrived, and the question now is, are they adequate? And we need to think about those things. We'll talk about it in the context of growth. But in terms of the inflation, we expect that the rains will lead to, let's say, more hydro power generation, and therefore, and also on the outside, we are seeing also the price of oil in the international markets coming down. So there is prospect there for downward movement in the price of fuel, or at least the inflation rate there. But of course, the big item aside from this is in terms of food crops, because with the rains, if they are reasonably adequate, there will be an increased supply in the markets. And the question I think that will remain in our mind is, what about maize, which is a significant element? And that, as we understand, there is ample supply in the various locations. The question is distribution. So will the existing supply of maize be distributed adequately, quickly, as we look forward? So those are the sort of risks in terms of the inflation. The non-food, non-fuel inflation remains low, well below 5%, and indicating that there are no demand pressures, or for that matter, spillovers from the inflation that we have just now mentioned on food and also fuel. So in that sense, the prospects of inflation going, obviously remaining within the band, the target band, we are clear that that is where it will be. But even a downward movement towards the middle of the band appear quite likely. On growth, as I say, 2018 was surprisingly stronger than was expected. The overall growth, as you know, was 6.3% in 2018, compared to our own projection of 6%. Now, there are other people that projected other numbers, but in any event. Actually, when we had growth at 6% in 2018, we were also, at that time, we were projecting growth at 6.3% for 2019. So those are the two numbers that we talked about last time. Actually, more than just the last time, it might have been over the last maybe 4 months or so. The 2018 outcome was better than expected, mainly because of a very strong agricultural sector. So this came in at 6.4, well above the 5% average for the sector, which is the average growth rate for agriculture of, as we expected. Manufacturing was also large, or came in strongly at 4.2, which is actually the highest growth rate of manufacturing since 2014. So you have to go to 2013 to have a growth rate of this amount. Services were particularly strong at 6.7%, and this includes trade, ICT, accommodation and restaurants, that's the tourism and all that. Again, we've made this point that services are doing quite well, and they are a sector we need to watch a lot more. Now, looking forward, 2019 will obviously be dragged down by the outcome of the long range. Is it going to be just delayed, or will it be poor, or will it be failed? These are all words that we have used before. At this point, of course, we don't know. We know the rains are here. We hope and pray that they continue to hold, and that agriculture does not suffer dramatically from this. But based on current outcomes of the rains and the distribution around the country, and in particular looking at where the agricultural sector is strongest, that is the food growing areas, it is, we can actually lower, or we can predict a lower growth rate by as much as 0.4 percentage points, depending, that is to 5.9%, depending on how bad the situation is. So at this point, it's better to wait for a stronger, more robust estimate. I've just now mentioned that depending on whether it is just delayed, poor, or failed, the growth rate could actually be shaved, could be brought down by as much as 0.4 percentage points. But I think the point here is that we will find out the actual outcome for Q1 in a month. So it's probably better to first look at that month and see, and then sort of improve the estimate, bearing in mind that also we'll have better information about the rains. No point getting everybody excited about predicting that the rains will be terrible, and then in a month you realize that they weren't so terrible, So in any event, but I guess the point here is that we expect agriculture to be particularly affected depending on the outcome of the rains. In terms of growth, there remains a soft spot, and this, as before, is the performance of the micro, small, and medium-sized enterprises. And these are particularly in services and manufacturing, and we will discuss this a little more in detail in a moment. What about the external sector? This has continued to strengthen. as was projected. I'm not going to go through detailed assessment of the external sector because it remains very much along the lines that we discussed last time. But April, the current account, well, maybe we begin with the current account for 2018, which has contracted to 5% of GDP, 5% of GDP. This compares to 6.2% of GDP in 2017, and if you go much further back to 2014, it was at 10.5% of GDP. So you can see a contraction since 2014 from 10.5% to in 2018, 5%. Now, in April, this contracted further to 4.5% of GDP. We are talking of the closing of the, or rather contraction of that deficit on the back of strong exports in horticulture, coffee, and so forth. Remittances also have remained very strong. There was a dip, as you know, in February, but not that much. Seasonal, really. After all, people have already, generally people bring in their, or send money home in December and in January for obvious reasons. And then it begins to pick up later after February, and that's what has happened. So those numbers appear very strong. So that's really all I want to say about the external sector as such. But also in terms of new information, yes, during the month of May, the government issued 2.1 billion Eurobond or Eurobond of that value in early May. As you know, the subscription was in the order of 9.5 billion. So multiple times, almost 10 times over the oversubscription. And as you know, it was in two blocks, really. One of 0.9 billion or 900 million, which was a 7-year bond. And this was sold, or this was came in at 7%. 7%, that's the pricing on it. And the second one was 1.2 billion, and that was for a tenure of 12 years, and it came in at 8%. So compared to other bonds issued around that same time, and also the pricing of our bonds in the market, meaning if you are looking at the Eurobond, you know, we already have Eurobonds in the market, and what prices are they trading at? This was quite favorable, as the CS reported in his press statement. That said, it reaffirms investors' interest and confidence in the, let's say, on the Kenyan brand. Of course, with the 2.1 billion US dollars, this would push our foreign FX reserves to 10.1, just shy of 10.1 billion US dollars, which is equivalent to 6.4 months of imports, something around there, 6.4 months of import. And this is an all-time high by a huge margin. So in terms of the amounts and also in terms of the coverage of, in terms of import coverage. That said, some risks still remain in the external sector. And these are materializing. The first of this is the US-China skirmish, which has now ended up becoming a full-scale war, depending on how you look at it. So it's a full-scale trade war. And as we all know, there'll be no winners. There'll be no winners in this war. So, as you also know, it has led to significant uncertainties in the financial markets. For instance, just in early May, there were significant instabilities in the financial markets. The prices, I mean, the various, a lot of instability because indeed that was the announcement of even more, let's say, tariffs that were being imposed. So markets don't react positively to such news, and it led to a lot of uncertainty. Now, what about us? What are we going to do? What are the mitigating measures or mitigating, what mitigants do we have? I think the first one is obviously to expand on our direct trade. So, for instance, expanding our direct trade to the US. And we are small compared to all the global trade. So that is significant in all sorts of ways, maybe. But I think the point here is we cannot hope to benefit as some claim you benefit for sort of redirection of trade. That I think won't work. We are small, and the sort of issues we don't make computing boards and all those other things that maybe they are more or Boeing aircrafts. Last time I checked, we didn't do that, so there wouldn't be any sort of redirection of that from the U.S. To Kenya in terms of the aircraft, right? If any tariffs are imposed on that. But the second element, of course, is to expand regionally, expanding regional trade. And here I think there's a good element because, as you know, we now have the African Continental Free Trade Area, which became effective but will become operational on July 7th. So this provides us with potential for expanding our trade regionally. As we have said before, Kenya's resilience partly is because of our being very regional in terms of trade. 40% of our trade, of our exports, go to the regional countries, that is the sub-Saharan Africa, the rest of sub-Saharan Africa. And about 25% of our trade, exports rather, goes to the other members of the East African community. So it is important to see that this is working in our, sort of to our strength. It's playing to our strength. Now, there's another risk which I would only say is becoming more and more, let's say, apparent. Well, it has always been apparent, but the drama of it is becoming even larger, and this is the Brexit risk. I don't think any of us knows how this thing is going to pan out in the next week, the next 2 months. And in some sense, it may appear like we are caught in a sort of unending drama. But the point here is that the mitigants, or the mitigant in particular, is the assurance that we have received from the UK authorities of a stable trading regime. So regardless of the outcome, our trade regime will remain invariant, meaning it won't change at least in the near term, or it may change in the medium term, but I think in the short term, we will continue with the same trade regime in terms of that we have today, and therefore there won't be any shock. So there won't be, let's say, a change in the tariff structure or change in the rules in terms of entry and all those other things that could end up becoming non-tariff barriers to trade. So those are the risks. And these are the external risks. They are materializing. They are significant. I didn't mention, but I think we mentioned this many times, so that's why I didn't flag it. But just now that I've said it, it is important to realize that it will end up, this risk will end up bringing down global growth. So that is a clear risk, and also have implications in the financial markets that I mentioned, and also the direct impacts that I mentioned a moment ago. Then what about the banking sector? I guess here also I'll be quick and say that the sector remains resilient, stable. The elements that were there, let's say 3 years ago, have continued to recede in the rear view mirror, and the stability has continued and you can see it in the in the banking sector. But one of the things I'll mention is, just to throw numbers out there, is the NPLs, the non-performing loans. So as a ratio of gross loans, this has, in April it was 12.9%, compared to February where it was 12.8%. Well, actually it moved in the second decimal, but let's leave the math for now. So in effect, it has not changed, right? It has remained broadly the same. The question, though, is where are the NPLs and what we need to do about it? The NPLs are largely in the personal household sector, manufacturing, and real estate. And this really, we've pointed to, constraints in cash flow that face these sectors or the actors in these sectors. And in particular, the constraint has come from delayed payments. Delayed payments. We call it various names. Some of us call it pending bills. Others call it something else. But I think this idea of delayed payments is significant. We've been flagging this issue again and again and again. I think we've been doing this for at least 1 year now. And it's something that obviously needs to be dealt with. Both payments by the public sector, that is the national government, and the counties, county governments. The county governments are particularly at fault in terms of delaying payments. And also the private sector. Private sector is also at fault, meaning you have an entity that has gotten services, could be products, it could be other services from another private entity, and the credit cycle generally is generally less than 3 months, right? Generally less than 3 months. But these are stretched from 3, 4, 6, and even a year. So in effect, what you're having is those that have the delayed payments are benefiting or are getting funded by the suppliers. And the suppliers then are in serious trouble because they cannot get another sort of credit facility or whatever else it is in order to continue their business. So in effect, you can see it is strangling the particularly smaller entities and also increasing the cost of the entity that ends up having the delayed payments, because in effect the supplier needs to calculate in the cost that delay, 1 year delay or whatever else it is. So it is significant and it has macroeconomic consequences, which is why I bring it up. Now, of course, there are other reasons, but I think that is a significant concern and it has to be dealt with. Now, on other things in the banking sector, I think here we can say that there has been, let's say, improvements or other measures that are strengthening the banking sector. It's not just NPLs that we need to flag or credit growth and things like that. Credit growth, by the way, has increased marginally to 4.3%. That was in the press release. But again, we are still far away from where we expect to be, which is in the order of 8%. But at least the direction is the right one. But in terms of things that we are doing to strengthen the banking sector, first, of course, is there has been continued consolidation. And this was one of the ones that I think some of you challenged us on this, that the governor, yes, it's fine to have it to have a consolidation, but you need to force the consolidation because a sort of a market-driven consolidation will not work. I guess the proof is of the pudding is in the eating. And I'll just go through a list of this, just so that we are clear where we are. So in terms of large acquisitions and mergers, just in case we forget, right? So there was, of course, the M Bank that took a position on the Oriental Bank, right? This is way back when. This is at least 2.5 years ago. I&M Bank also took over Gyro Bank. This is well over 2.5 years ago. By the way, in each one of these, you can go to our website, and there has been a press release on each one of these. So the information is out there. Then, of course, there was the SBM acquisition of Fidelity Bank. SBM was a new entrant into our market, and it acquired Fidelity Bank. And then subsequently, in August 2017, took a sort of a carve out of Chase Bank, loans and deposits, about 75% of that bank. Then there was a little before that, DTB and Abi Bank. Again, that also is on our website. And then looking forward, there's a lot of noise in terms of articles in your papers and elsewhere about two forthcoming acquisitions, mergers, whatever you want to call them. And this is the first, there is the NIC Bank and CBA. That is something that I think has been reported quite widely. And then also KCB and NBK. These are banks we know about, and there's things that are there. The point in the end is it's not an issue just about shareholders reorganizing their positions. We've made this point before. This has been a consequence of first re-examination of the business models that the banks actually have. That we have been making this point since 2016. The business model, they need to be recalibrate their business models so that they can be more resilient. That is essential, being more resilient, looking forward, and in effect, this has been something that has been coming. Then, of course, other things about strengthening their governance, the bank, because as we said, a key element, a key weakness in our banks is governance, and so they need to strengthen them in particular ways. And also obviously other things, but in some cases like KCB and NBK, the shareholders also want to have, it's better for them to have one common position. At least that's how they've explained it. So it's an outcome for them that is positive. In any event, I thought I would at least tell you or mention this. I know I have belabored it, but this consolidation is obviously something that we are positive about, and we are not done yet. We hope that the banks are also listening to you, and they need to continue looking at their business models and strengthening them as we go forward. Now, there's been other things as well. So consolidation is one. The second one is the recent launching of the Kenya Mortgage Refinance Company, of which we as the central bank will regulate, and we have gone a long way in that direction, and we are at the point where we have received the regulations, the definitive regulations, which we are signing off on with the Attorney General, and subsequently, in the very near future, we will gazette them and also publish them to Parliament, upon which, after Parliament has signed off on them, given the time, I think it's 14 days that they have to look at this, then of course they'll become effective, and then we'll move on in terms of regulating the institution. The point is this will help, and this will help lower the cost of mortgages for individuals. This is the main intent, and consequently, most of us will have a chance to own in an affordable way a house, indeed a roof over our heads. So that is the objective, a long-term objective, but from our perspective, obviously we are seized with that objective. And at the same time, we see our responsibility in terms of regulating that institution so that it does not end up becoming a burden or a risk for the economy, despite everybody's best intentions. Another element is the banking charter, which we talked about some time ago. It's now, it has been operational for some time now. And one of the elements there is we had given banks, well, maybe I should backtrack. The point of the banking charter was to strengthen the customer centricity of banks in particular way, and to really improve, or let's put it as, to improve the position of the customer in relation to the bank, to the institutions, lending institutions. And as you know, we have benefited from examining the experiences in other countries. And we also know that one of the problems one of the concerns that led to the interest rate caps was a sense that the consumer was helpless. And the consumer was, the consumer's concerns, Wanjiko's concerns, were not addressed or were not looked at favorably by the commercial banks. The banking charter goes quite a way in terms of reversing that disequilibrium or correcting that disequilibrium. And we require banks, among other things in the charter, is to come up with concrete measures, concrete plans that are approved by their board. So this isn't just your bank, your branch manager, or your branch relationship manager. No. This has to be approved by the boards, and it requires them to, among other things, have a mechanism for complaints so as to address those complaints within 7 days and other things like that. So I think the point here is that this is already out there. We do hope that, and we do have, given the content of it, we believe it will be very beneficial to all the customers. And the first, we requested that these plans be brought to us by end of this month, end May. So we expect to see all of them and discuss it with the banks and see where they can improve and so forth. This is something we've done in other areas. So I think the point here is that the classic one is the ICAPs that we discuss with the banks. So I think this is something that we are looking at, and I hope will lead to quick wins in terms of the customers and so forth. I'm not done yet. There's still more things that we have done recently. So if you're losing patience, let's be warned. The fourth area, now I didn't realize there are four, but in any event, the fourth area is we just recently revised the Microfinance Act. And this is to improve having learned or benefiting from the experiences over the last few years, since 10 plus years since we put the Microfinance Act in place, and also learning from let's say the weaknesses and the directions. What have the microfinance banks become, and where are the weaknesses and so forth. In particular also, the revised Microfinance Act deals with the issue of Islamic microfinance banking. This has not been there before. So we've injected specific elements benefiting from the experiences around the world in terms of Islamic banking. And here I can tell you that we have looked at other centers of Islamic banking, and these are, for instance, Indonesia, the UK, and others, and also consulted quite widely with experts in this area, and indeed also the international I guess it's Islamic Financial Stability Board that actually has a lot of experience and indeed takes care of Islamic financial stability. So I actually thought that that was a very good effort in terms of benefiting from around the world, experiences elsewhere in the world. That said, the revised Microfinance Act is now on our website for public consultation, meaning for you can actually comment on it. So we have requested comments from anybody, yourselves, customers, anyone, other institutions. So it's there, and our expectation is that in the very near term, we will incorporate the comments as we see how to do that, and then roll it out, meaning send them out to Parliament and consequently move on, make the act, let's say, the revision in the act effective as required by our laws. So I think that is something that you should be aware of. I'm still not done. There has also been revision in the credit reference bureaus, the credit reference bureau regulations, the regulations of the credit reference bureaus. And this also out there for public participation. And this is something that I think you can also comment on. It again benefits or seeks to address the concerns that Wanjiko and yourselves have had on the credit reference bureaus. And there are specific elements that we have improved. We actually did a rather interesting survey. I'm not sure if we ever put out the results of that survey. I think they were very internal. There were things that, so we did talk to them, talk to various people to make sure that we are not just we are not just adjusting the law or adjusting things, just based on our own experiences. It is important to benefit from everybody. So I think that's another one that that is out there, and people can comment on it. There is another one that's coming. It's not yet out there, so maybe I'll stop with that, right? I do need to stop somewhere. And we intend to come back shortly with an Islamic banking law, basically, which will expand our reach in terms of Islamic banking. And as you know, the reason here is to expand our financial inclusion. That's really it. Because there is a certain percentage of our population that are fully not included. And I think by having these products and or having these financial products, they will be beneficial to them. Meaning those that are currently not excluded, and that are currently excluded from the financial system, and which we believe will help uplift their livelihood and indeed their welfare. So that's what I want to say about all the things in the banking sector. There are other things, but I think this has been a long list. What other issues do I have? Well, I think only two. The first is a week ago, a bit more than a week ago, Monday last week, we launched, and I say we because I was there, and I'm sure all of you have seen the we part of that. Yes, I was there, not in disguise, by the way. Anyway, so a new innovative product aimed at providing much needed credit to micro, small, and medium-sized enterprises. That is the purpose of it. And if I had to stress any word here, it wouldn't be the we, it would be the innovative nature of this product. Obviously, it was launched aside from the fanfare at the launch. If you look at the discussion about it, even say on our press release and things like that, it was quite low key, and it will remain like that. We won't. At the end, this was a pilot, and it means that we are tweaking product is being tweaked in particular ways. And in the end, the proof of it, the success of it, will be relative to the medium, small, and to the micro, small, and medium-sized enterprises. So, in a sense, this reminds me of that whole story about Twitter wars, right? So we can argue so much about, I don't know, the quality of your football team and the quality of my football team. But in the end, the football teams are out there, in the, whatever it is, it doesn't really matter in the end. Whether you agree with me or I agree with you in terms of my team is better than your team, kind of thing. Anyway, but let me be a bit more precise in terms of the issues to raise. This is innovative in many ways. The first is that this is a consortium of 5 banks that are working together for a common cause. Now, as you know, banks have tended to be very, very, very competitive. And competitive here has the negative connotation. I don't know if the most competitive person I know is a gentleman by the name Eliud Kipchoge. We all know. Very competitive. But it's a lesson to watch him work with the competitors, meaning the Ethiopians and others that are running with him, and even other Kenyans. The point I want to make is that competition doesn't need to be brutal. And it turns out that maybe our banks, in terms of their understanding of competition, has generally been more negative than anything else. But here's a case where they are working together and for a common cause. Now, where was CBK in this? CBK was in this in terms of using its convening power to focus on a particular need. And the need is clear. We had already gone to Gikomba and other places. It wasn't just Gikomba. Other places, and talked to a lot of the individuals that maybe are in this sector, and understood a little better what is it that they needed. And having had conversations with the banks, this is the product that they put together. Yes, it is a commercial product. It is a commercial product. And I think it is something that we are looking at favorably because of the other elements of it, and in particular, the potential it has for lifting those that are in this sector and had been locked out of the financial sector. So, for instance, obviously, a key element in this is the sense of their dignity, right? Those entrepreneurs, and that has to be preserved. Now, we make this point lightly, but a lot of those entrepreneurs cannot quite go to a commercial bank over lunch to get a loan, the way you and I can, right? And because it's not really their space, if you understand what I'm getting at. And that's important. So they need to have a product that is available anytime, anywhere. And this obviously means it has to be mobile product. And this new product has that characteristic. The other element is it should be no frills, meaning all these complicated structures and all that, that maybe you and I can handle. Puts and pulls and bells and whistles and many other things. That's not really what these entrepreneurs want. Easy access, quick approval, which means a sort of artificial intelligence engine has to drive this thing. And I'm very glad to say that I learned a lot over the last few months about artificial intelligence, just looking at this product. Affordability is another key element. It's true. What we are putting out there is at 9%. It's aimed to be 1 month to, it's actually aimed at the 1-year range, right? 1 year. 1 year. So that's really where it's aimed at. And the affordability element, there is the interest rate. Excuse me. Sorry about that. So the affordability element, the interest rate is, at least at this moment, is at 9% per annum. Per annum. And there's a facility fee of 4%. And I would actually say, I would challenge any of you to get a loan anywhere in Kenya for that, at those terms. If you can't tell me, because I do need that loan. But it is important to see the affordability element in this. The question I would ask is, or you may ask is this something that is sustainable? One of you asked, is it a guarantee fund or by any means? The answer is no. This is, or rather, it's no in the sense of it's not a guarantee fund, but it is sustainable. It's really truly a commercial product. And the element here, and this is the other element of the innovative nature of this, what has been happening is that there has always been this concern about the risk of the entrepreneurs in this sector. So they're too risky. The question is, how do the product allows the institution, the lender, to deal with that risk, and therefore reduce the sort of risk premium, from what may have been something in the order of 6%, 6 percentage points, to bring it down to virtually virtually nothing, or rather reduce it appreciably. You will never reduce it to zero, obviously. But I think the point here is that that is the innovative nature of it, and therefore it then becomes viable. Meaning you can actually lend at those rather what appears compared to everyone else as favorable rates. You can reduce the the risk premium sufficiently so that what appeared to be impossible becomes possible. The other points I wanted to make before moving on, which is actually, aside from the affordability, the credit size is also meaningful. Meaning you're not just giving them, this is an entrepreneur. He doesn't need just 1,000 for a year, 1,000 Kenya shillings for a year. So the range is, at this moment, is 30K to 250K. And you can already see that there's a lot of interest in the product as is, even though we are still in the, let's say, in the pilot stage. We've only been on the pilot stage for only 1 week. So there's a lot of interest there. Now, why is it that this is so important? I think there are many reasons, which you all know. First is because Kenya runs on SMEs. Let's be clear. The action in our economy is in SMEs. And you can say that part of it, this is why maybe there has been this, let's say, incongruence of GDP numbers looking very good, but also a lot of sense that in the small enterprises, there's a lot of, let's say, tightness, lack of finance, and so forth. Secondly, this product is scalable, as it is. It's scalable, meaning it's true it started as a consortium of 5 banks, but other banks can. And by the way, already there has been, I know of 5 banks that have already asked to be part of the, and this is only in the first week, to be part of this coalition, or should we say the consortium of banks, because they have seen the beauty or the innovativeness of the product. How we started off on the, well, let's leave that. There is an interesting thing about the other aspects. Finance is not the only problem. It's not the only problems of these enterprises. And you can then layer in onto this product all those other aspects. For instance, think about things about training. So with this product, one can think of ways to add quote unquote bells and whistles that will be beneficial to the entrepreneurs. So there's a lot of potential for, or upside potential in terms of scaling up this product and to the benefit of the SMEs and to the benefit of our entrepreneurs and indeed to the benefit of our economy. The last point in my list is just to remind you, I should have mentioned it before in my long list of products, but of things that have happened. But I want to remind you that we also had the FinAccess survey. This is the 2019 FinAccess survey, and this is an important element. I do hope all of you have got a copy of it. If not, it's on our website. We put things on our website, so I hope it's there. But if you're still old-fashioned, you can always get a copy of the FinAccess document. There's a lot of interesting information there. Unfortunately, the only number that all of us think of, I mean, at the beginning, most of us think about is where are we in terms of FinAccess? Is it north of 80% or where is it? But that's only one aspect. This was actually an interesting survey because it expanded into other things like use and also other interesting features about how the products are being used. So it has a lot of material, and you can also go onto our website, also FSD's website, and also Kenya National Bureau of Statistics website, and you'll have even more material there beyond what is published in the book. And so you can actually, I don't want to call it the raw data, but you can drill down and slice and dice the various, the data that is there as fits your question, which I think also is a rather innovative way. I think this is the first time we have had something like that, where you have a lot more data that supports the survey, and you can then use it, I mean, using very simple techniques or tools that are embedded on the data, and you can then sort of answer more fundamental questions. I'm sorry if I've spoken too long. I'll stop now and take your questions. Thank you all.
So thank you very much, Governor, and welcome, Dan Angila. Now, we shall take questions as we usually do, which is please put your hands up. Once you have the microphone in your hand, and there's microphones on both sides, please stand up, say your name and your institution, then please ask your question. And please, because I notice there's a lot of questions, if you can just do one per round, we'll still come back, make sure you exhaust everything. So do not do question 1, A, B, C, D, and E. One question, your most urgent question. If your question has been asked before, please don't ask it again. I noticed we might have to get through quite a number of questions this morning. So starting at that corner where I saw like a million hands.
Good morning. My name is Julie from Capital FM. Governor, I'd just like to know if we're likely to see in office past June 19th. Thank you.
What else?
Thank you.
Good morning. My name is Victoria from Metropole, East Africa. I would like to know your comment on the government borrowing at the moment. We know that we've gone to ask for money from World Bank. I would like to know your thoughts. Thanks.
Okay.
Behind you, there's not on this side. Oh, they're here, the usual suspects.
My name is Tony Sanya. I'm from Champs Media.
If you can please speak louder, and we're trying to adjust the microphone volume as well, but speak louder as well.
Oh, sure. My name is Tony Sanya. I'm from
Tony.
Tony Sanya from Champs Media. Basically, mine is about mobile loan lenders. What would be the CBK's whatever stand on regulation, and would you support self-regulation?
One from this side, and then we'll go to round 2. Today, let's be nice to Otiato. So, Otiato starts. One question. Do you have a microphone? No, you don't. Let me give you mine.
Yes, about the consolidation, NBK, there's a few MPs who have raised issues with the NBK deal. So just wanted to know if, do you foresee that delaying the process, and whether their arguments stand in terms of saying that it's a state corporation, so it isn't necessarily private. And then for the
Fine, 1, 2, 3, 4.
Take those ones first, please, Governor.
The 4, okay. So first from Capital FM, I didn't get your name. Whether I'm likely to stay in office after June, whatever. Well, I would ask you to direct that question to the appointing authority. Only the appointing authority knows that the answer to that question. So, and I think any speculation, doesn't lead us anywhere. So, I think that's a better place to put your question. Victoria asked about government borrowing. I think we made that point clear before, which is that the headroom for new borrowing has diminished. We made that point before. We also made the point that in terms of the new borrowing, part of that would have allowed refinancing of existing loans. We've made those 2 points before. For instance, the Eurobond 2.1 billion, obviously, as I gave you the terms in terms of the extension, right? Meaning the 7 years and 12 years, right, the terms. But remember, we are repaying some of the Eurobonds that have fallen due. As a matter of fact, we'll be repaying another portion of it, 750 million on June 24th. The payment will be larger than that because it will be according to, this is now from memory, 750 million US is the principal, and I think interest is something like 80 million US. So there'll be a number, something in the order of 800 that we'll have to pay around on June 24th, right? So the point is here you can see that a portion of those, well, obviously it's not, money is fungible, so it's not the same resources. But you can see the government's debt, in effect, if nothing else happens, that portion has been extended 7 years or 12 years. So you could see it's a refinancing arrangement, hopefully giving us more room to expand the economy, increase our debt, increase our export capacity and indeed the capacity to maintain many other things. Those points we've made before. That said, I think it is important to say that the moment for dealing with debt reorganization, looking at debt and itself, reorganizing it to create more room, that moment has come. It is now with us. So in our estimate as let's say, advisors of the government, CBK, by the way, is an advisor to the government by law. Our point is, yes, this is the time to begin working on reorganizing our debt in a sort of, not in a frantic way. So doing it the Eliud Kipchoge way, which is it's a marathon and you have to do it in a steady way. So I hope that answers your question, because this, I think, is a time to deal with the longer term things, figure out which are the loans that, there are many options that one can look at if one begins to ask that question. So again, this is the time to ask that question. I didn't get your name, Tony Sabi or Tony Sunny. You asked about mobile regulators and self-regulation. I want to begin with the last part, self-regulation. Self-regulation, in my view, is what importance is to self-importance. I think we need to think a little about that. Meaning, there's no such place for self-regulation. If you remember self-regulation and that have been extolled, or were extolled just before the global financial crisis, they were part of the reason why we ended up in the global financial crisis. So I think the point here, by the way, that quote is not from me. It is from somebody else. I'll tell you who it is. Yeah, in any event. You can actually even Google it. But anyway, the point, going back to your question, the danger of self-regulation, there are many dangers here, and the danger really relates to the conflicts of interest that arise. And also, and this is sort of even in giving the wrong incentives at the right points. This is why you need to have regulation that is based on specific principles. And the principles here obviously relate to one, protecting Wanjiko, protecting the consumers. It's not always in the interest of the lender, whoever is doing the mobile lending, to provide, let's say, appropriate outcomes for the consumer, Wanjiko. So that's really our point here. So there has to be a proper regulation of everyone. The other principle that we stand on is that similar products should be regulated in a similar way. And this, the big word here is called regulatory arbitrage. We do not support having same products or same type of products. You can call them different names, you can call them whatever it is, but it is lending to a customer, or for that matter, receiving deposit from a customer. You may call it something else, but it is still a deposit. So in that sense, if you have a banking sort of, or what we have always thought of as banking in terms of the function, not so much the name, then you should be regulated in appropriately, like any other. And this is the only way to move forward. Otherwise, there will be that arbitrage, which will end up, in a sense, be beneficial to some. And in the end, that will sow the seed for the next crisis or the collapse of a problem, financial instability or whatever it is. So I hope I'm clear about mobile regulation. It needs to be regulated appropriately. It doesn't have to be regulated in excessively, but rather regulated in the same way as other products or similar products or similar functions or similar occupations. That is something that I think we are now more concerned about because, as you know, we've had they've grown like mushrooms, unfortunately, which is the online or credit-only lenders, right? And as you can see, they are not exactly working for Wanjiko. Now, it is true that maybe in the absence of other sources of funding to the micro, small, and medium-sized enterprises, this is where they go. I mean, you understand why somebody goes to a Shylock who is charging them even 2% per day, or for that matter, 10% in a week, right? We understand that because they are hard pressed. They have nowhere else to go. So the point here is that surely the reason there is clear that I think we cannot in a sense condone it. And maybe now that there is these other products that are coming in that are appropriately priced, that are sensitive to the borrower, then these products will have to recalibrate themselves. I hope you understand what it means to recalibrate themselves, meaning they change or they die. So I think that is the benefit of, you could say the external, or rather externalities, the additional benefits of having a properly arranged, innovative product like the one I mentioned. Then Bunyunyi was asking about the consolidation of NBK and about the concerns of members of parliament. I think in a sense I would say it is, we live in a quite liberal and open democracy where people talk about everything. So I think for sure we as the central bank support conversations about this and other things. But I think the point I would make is that there is a process and it is constrained by law in particular ways. And those processes, as far as we know, are being followed. So the outcomes actually will be appropriate for the country. It's not only an issue of whether so-and-so has been heard or has not been heard. I don't think that is the That is the only concern. There are many other concerns, and that's why the law, in a sense, constrains the direction that is taken in particular ways. Now, whether or not the government, which is a shareholder, as you know, is the principal shareholder of both these institutions, has done what it should or should not, well, you can direct that question elsewhere. In that, we do not speak for government. Any other questions?
Brenda Kirubo, KTN News. You said the Credit Reference Bureau regulations have been revised. I plan on reading them after this. But what were some of Wanjiko's concerns in relation to the previous regulations, and just how different will it be in the revised version? And also just a clarification in relation to the mobile app, the loans. We are having some of them actually, the providers, accessing customer or clients' information to the extent that they're actually contacting even their contact list. So I'm just to ask, how exactly are they getting away with this, and has it been brought to the CBK's attention? Thank you.
Thank you, Brenda, for asking 2 questions.
Good morning. Morning, Governor.
Good morning, how are you?
I'm very well. My name is Dennis Otieno, reporter, Citizen TV. I just wanted to know, we've got 42 commercial banks in the country. Last week, when the Kenya Mortgage Refinance Company was being launched, we only had 7 commercial banks taking part. And also looking at the SME products that you talked about, that you said it's we, being you, that clearly when rolling it out, we only had 5 banks coming on board. Why do you think many commercial banks are not coming in good numbers when it comes to rolling out of these products? Thank you. It's fine.
Thanks. David Abling from Bloomberg. The MPC appears to have taken a hawkish tone in the recent past, which is different from the accommodative policy you had spoken about a few months ago. I'd like to know, does this signal that we are likely to see a hike in the signal rate? And then secondly, could you comment on the IMF facility? Do you think Kenya still needs it after having successfully...
Does the boss allow you? Second question. We all look at him.
Feel free to ignore any second question.
Okay.
Lisa, is there anyone?
Yes. Good morning, Governor.
Good morning, how are you?
Fine, Jimmy Mbogo, K24. Now, I wanted to know, is it likely that you're going to have the new notes before the end of your first term?
So basically, you have notes in 3 weeks. Alex, I think you're the hand of God. Then that's the last one, and then we'll come back.
Good afternoon, Governor.
Good afternoon.
Alex Mwangi from NTV.
Yes.
My question regards the facility that you launched recently, STAWI. What would you say to criticism that it is doing the homework that the interest rate cap has failed to do in reaching to the SMEs, especially at the bottom rank of the pie?
Thank you, Governor. Take those ones.
Take this?
Yeah.
So in terms of Brenda's question, Brenda, I love reading, but I would suggest you read it. You read the thing, but there is actually a summary at the beginning. We now write summaries of, so you don't need to read everything. So just read the first part, but let me point to some of the things. If you want, you could take some of the questions. Do you know they throw me under the bus. This is not fair. But anyway, so in terms of the specifics, first is the issue of, a simple thing, data, right? All the data that is used. You know that there was an expansion of the reporting agencies, right? And so the data that is supposed to come to the into the mechanism, I don't want to call it a database because it's not quite a database. Maybe when you say database, it simplifies the whole point. Maybe I should use that term. So that is brought into the database, right? Even though you understand it need not be a database as such, right? The other thing is the reporting frequency. right? The reporting frequency, at times it has been that it takes forever to refresh. So the data takes about a month to actually be populated. And the idea here is that it will be, I believe it is every 2 days. I may be wrong on that, but it may be even daily. I'm not sure now whether it's 1 or 2 days. But the refresh is much faster by law. You are required to refresh. I'm talking of the reporting agencies. The banks need to refresh much more quickly. So for instance, if I actually, I've been blacklisted in the CRB because of a loan that I was supposed to, that I defaulted on, and then I pay that loan. I mean, I'm no longer in default, am I? So this actually should be reflected in my data in the database quickly, which is a big thing. Of course, there was the issue of they are very quick. Generally, they've been very quick in responding when I default or when customers default, but they're not that quick in terms of responding when you make good your payments. You understand? Getting you out of it. That's one thing. The other things about, for instance, sending the data to all CRBs at once, meaning in the database so that it's visible by everybody, and making sure that other providers also put in their information. So those are the simple things, but there are other elements, and I would just encourage you to read. I think it's only 1 page or maximum 2 pages that summarizes that. But I would, I mean, the only thing here is I'm really happy with the way the team put this information together, meaning they've not only surveyed consumers, they surveyed the CRBs, and also looked around quite widely. They also worked with other agencies, right? Other agencies, and indeed others that have experience around the world, so development partners. So I'm very proud that our team has, it's amazing, you know, there's so much work being done quietly, but I really hope that this will address most, or let's say, for sure it will never address all, but it will address at least the significant elements, problems that we've been having with CRBs, because it is a very useful tool. But if it is not used correctly, then I think we would end up having a mess like the one we've been having with CRBs. So that it's now more difficult to score or to distinguish to score correctly, to distinguish a good borrower from a bad borrower. That's one. Then in terms of, you had asked the second question on mobile loans, and I don't remember it, so I ask you to ask it.
It's just a clarification.
Okay, so what is it? Just remind.
There have been concerns in relation to the providers, the mobile app providers.
Oh, yeah.
So when the client, defaults on them.
No, I remember now the thing.
Okay.
This is something that is bothering us, has bothered us a lot. And the ones that you are mentioning are actually not, I would say they are the ones that are unregulated. Those are the ones you're mentioning. You could even tell me the names. I think it will be the same names that I have in my head. And yes, that is something that has come to us. And the consumer, let's say, the way the consumer concerns are being handled is a real cause for concern for us. And you gave a very simple example where, let's say, a particular individual does not pay on time. And for instance, maybe they didn't pay on time because that was a public holiday, meaning like we had Easter. We looked at the numbers generally, not just on those ones, but in Easter, actually numbers went up, meaning people didn't repay around that time. And I think one can understand, and then right after Easter, they repay. I don't know whether Easter was at the end of the month or what, but clearly we do understand what happens, because around that time, maybe a lot of us go and visit their rural homes, and there are other things that are going on, and maybe some of those things, payments have been forgotten, whatever else it is. The point is, after that, if the consumer gets, if somebody dips into their contacts and then sends messages to most people on my contact list. You know, I'll believe it. I'll believe it. I mean, that is well beyond the pale. I mean, you are sending this, so I think we understand each other. I don't need to go any more on this one, but this is something that needs to be dealt with forthwith. It is, in a sense, an abuse of information that one maybe gets into or has access because of protection issues or whatever else it is. And I think my hope here is, even before we get laws that will deal with this sector, which we need to, so this goes back, I hope that a lot of them will be wiped out. Yeah, wipe them out. If they're not serving a purpose, let them go. I mean, they're no different from Shylocks. I mean, it's the equivalent of, you know, I could, you know, there's this sort of characterization of thieves, right? Wearing a mask. You understand what I'm saying, right? That's the way I know that somebody's a thief, that they have a mask, right? No, I mean, most thieves actually are dressed like me or you. You know, there's no mask. They look, they dress pretty well. And so I'm just making the point that there are certain things that cannot be allowed and should not be allowed. The society has to reject them. So I hope I've made my point in those two, answering both of you. Dennis was asking questions about numbers. Actually, it wasn't numbers. It was more about why some banks are involved in some things and others are not. I think most banks are excited about new products, but I think it all begins first and foremost with their risk tolerance. So there are banks that can maybe because they are much more, they are closer to that sector, or let's say more innovative in their thinking. For instance, this SME product that we were talking a moment ago, the element there has to be somebody who understands artificial intelligence. It's really that. You know, you need to have data scientists. So if a bank doesn't have data scientists, it doesn't have people that can do artificial intelligence, then it will be very slow, if you understand, in sort of appreciating these things. And I think that is, so those characteristics that are specific to them, even though the door is open to all banks, not everybody accepts that it is there. And frankly, it's like any other area. I mean, you and I may like math, the subject mathematics, right? But if you like it much more than I, you'll be much more excited about it, and that would probably be the first topic you'll be reading, you know, when I'm just looking at economics. So I think it is those sort of disparities. But in terms of the SMEs, or the SME product, absolutely, it's open to the others. And again, as I say, the others have managed, or there are others that have indicated their wish to be part of this consortium, and they'll be brought in as the product gets sort of strengthened and moving out of the let's say pilot stage. Having said that, I think the point also here is these are the sort of innovations. Now that you've allowed me to speak again about the SME product, frankly, at the end of the day, this may be transformational in a big way. We are now not talking just Kenya. I can be honest, I can tell you that before building this product, we looked around the world for similar products. How are they dealing with SMEs? As a matter of fact, I know there's an SME conference going on today. It was there yesterday and today as well. Unfortunately, we have been busy with the Mpc and also meeting you, so we cannot be there. But I think the point I'm making is this is revolutionary not just for Kenya, but also for the world. David asked a question about hawkish tones and things. I am not sure I would agree with you about the hawkish, I mean, that sort of a characterization, but whether I agree with you is somewhat irrelevant. What are the facts? The facts are we still have the interest rate caps. And the fact is that we still don't know whether we could have a perverse reaction. The fact also is that it is true there has been some pressures from increases from, say, food, which I mentioned a moment ago, that pushed inflation to 6.6%. What we don't know is the second order effects of that. And so in a sense, it is important to watch the second, to stand ready, watching for the second order effects. I just mentioned a moment ago that, or at the beginning of my presentation, that we expect those to be muted. I mentioned that the non-food, non-fuel inflation has remained below or around 3%. It has been below 5%. But on the other hand, we do not want a return on inflation, right? A sort of, and just to give you an image that will remain with you forever, my view about inflation, well, my view, inflation is somewhat like toothpaste, right? If you push toothpaste out of the tube, it's very difficult to get it back into the tube. You understand what I'm saying? So it is important to guard against a resurgence or resurgence in inflation. So that's one thing. And then finally, there has been, they did, and it was mentioned in the press release, that they are looking at, they saw, they noted, or they welcomed, I'm not sure which of the two words, I think it was welcomed. They welcomed the innovative products that were coming in terms of providing credit to the SMEs, the MSMEs. In effect, if there was a reduction in, if let's say you wanted to accommodate, right? You wanted to take an accommodative stance and you'd lower interest rates. The point is that you'd expect that transmission to work its way through the system in the standard sort of channels. And then lead to a growth in credit, which would then have an impact on production and so forth. Here is a case where if these products actually work, there will be significant increase in credit to those sectors, the sectors that are actually carrying the economy forward. So this is the equivalent, pardon again, another image that may stay with you. This is the equivalent of drip irrigation. I don't know if you've seen those, in the olden days, you'd have sprinklers that go all over and spread water even on the road or on wherever. But now you have drip irrigation where you actually provide the water directly at the plant, at the base of the plant. So this is what this these products are intended on doing, so that it goes exactly to where it's needed. By the way, I would also tell you another piece of trivia for you. We tested this product. So again, it's being directed to the SMEs, the entrepreneurs, and using information, general information, not in the way Brenda sort of explained to us, but positively information, not on your contacts, but on your transactions, right? The transactions of the, now, if you look at the transactions, the scoring of those transactions, that's the AI engine that is there. And then you say, okay, you will test it on the CEOs of those 5 banks. What would you expect? Actually, guess what? They failed. They scored 0. They wouldn't get any credit through this product. And it's interesting that it's discriminating in that sense. So it picks out the entrepreneur and leaves out those that are on fixed salaries and things like that. So I thought that was interesting. So I hope I've answered your question, David. I don't think the issue here is to signal a hike, or there is actually that balance of where is the economy today and what are the critical risks that the economy faces. David Mugo asked about when the new bank notes will be launched. And the answer here is the one I've mentioned before, which is we are going as fast as we can, appreciating that the various constraints were removed recently, but we are going as fast as we can to towards launching, not more than launching, towards satisfying the requirement which is to have the new generation notes released to the public or issued to the public as soon as we can. So I cannot give you specifics beyond that. Then there was the other David who asked something about Stawi, and I don't remember what he asked. What was it? Oh, it was Alex. What was it?
The question I asked is on what you would say to criticism that Stawi is doing the homework of interest rate cap.
Yeah. Thank you. Actually, as I said in the presentation, we have continued. I mean, we say that the interest rate caps were supposed, or rather, would actually be harmful to the micro, small, and medium-sized enterprises. We have made that point 1,000 times. We'll make it again. They remain harmful. And in a sense, they ration out that sector. So they end up, in a sense, pushing credit from those sectors to actually credit that to sectors that are much stronger, right? Let's say the corporate sector and so forth. That, I think the evidence is in, and it's quite clear. So in that sense, we could not sit waiting. We could not. And this is the issue of the central bank. The central bank is very concerned about about credit in the economy, and indeed the issue of growth in the economy and so forth. And consequently, we know that that is where the problem is. And this is why we therefore led. This is why we did take this matter, grab the bull by the horns, and said, okay, fine, let's do something. Let's bring banks together and see if they can come up with an innovative product. And I think the point here is, it looks like they put something on the table that seems to be to have the prospects of succeeding. It's not yet there yet. I mean, we need some track record, and it needs to be tweaked and all those other things. And by the way, the lending is not to you and me, as I said. You know, whether or not they lend it to you, that's irrelevant, right? It is to where the work is being done, you know, by those people. Remember, in the end also, once this product really works, you know, it will be available to everybody in the country at the same time. So you can see all the SMEs. I was looking at, for instance, the numbers in, if you want to figure out what the competition looks like, right? So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Remember the so-called the youth fund, right? The Youth Enterprise Development Fund. So in the 11 years, 2007, financial year 0708 to financial year 1718, there has been a total, let's look at the disbursements. There has been disbursements of about 3 billion, 3.5 billion, right? And this is to maybe, the numbers are a bit odd here, but I had a number here. This is a different number, 12 billion, I am not sure what this is, advances to 1.1 million youth around the country. So 1.1 million. My point is, this product, it has legs, and it can be very far-reaching. So even as, maybe you could say that we needed the interest rate caps sort of pushed us out of our comfort zone. And after all, every innovation requires some pressure. You understand what I'm saying? Nobody wants to get the price of an easy victory, if you understand what I mean. I mean, definitely don't give a prize to a football team for having very clean football boots, very nicely ironed or pressed shirts. I mean, that doesn't do the job, you understand, right? But maybe if it is Manchester United, that would be okay, because that would be the only prize they would get. What else?
It is him who said, not me. Starting with Brian, then Kefa.
I see
Hold
a
on.
national fund there.
Yeah, I just want to get the people who have not asked yet. So I think start with Brian, then Kefa, then this side with you, and then we'll come back to the second round. And then once we're done with that, please let's take the last round. So anyone else who hasn't asked and you want to ask, and please don't repeat a question that's been asked before, because time has really gone by. Brian.
Yes, my name is Brian Njoroge from the Business Daily. During this year, nearly 4-year term, what do you consider as perhaps an achievement in terms of monetary policy, you and your team? And also, would you consider taking up the job offer in case the president renews your term? Thanks.
Kefa.
Njoroge Kefa, Radio Citizen. Good morning, Governor. My question pertains interest rate caps. And now that you have a facility that's advancing credit at roughly 9%, similar to the CBR, and you've mentioned of the first hand from Parliament, how do you expect your continued fight on interest rate cap repeal to go? And does if MSME, the facilities are successful, do you expect any monetary policy inefficiencies that you've pointed to in the past to ease? Yeah, thank you.
Good morning, Governor. My name is Omar Mohammed from Reuters.
Where are you? Oh, I'm sorry. Yeah, I'm sorry. I didn't see you. Hi,
My question is...
but who do you work for?
Reuters.
Oh, Reuters.
Yeah.
Okay.
I have a question with regards to the effect of anti-money laundering laws. Are they having an impact with regards to people possibly moving to other sources of transferring cash, for example, looking for gold? And has that had an impact of perhaps, increasing the ways in which people are being scammed through the increase we've seen these gold scamming activities and so on? And just one follow-up. I know you said that with regards to your term ending that we should talk to the appointing authority, but I was wondering if I could just follow up on whether you are interested in continuing for a second term.
Okay, there's no emphasizing. The question has been asked. Just looking from this end, because I only have one microphone on this side. So Otiato, who else? Just want to make sure we have. So Brenda and Habling, that's it, right? Tumaliza, haya.
About the charter, you had indicated that in the initial draft there was that 20% conditions for banks to increase their lending by 20% from 2017 benchmarks. Where was it dropped? And considering this would have been with Stawi, it would have been even easier to kind of reach those targets.
More clarification so that I write the correct thing. In relation to regulating their mobile apps, how many are regulated? And if we can have the names, please. And then the ones that are specifically on your watch list, could you please give us the names so that at least we can know? Thank you.
On the IMF precautionary facility, would you say Kenya still needs it, having successfully, floated the Eurobond? And then lastly, could you give us the status of Jamibora Bank? Is it due to be acquired? They have not published their results since Q3 of last year. What's the status? Thanks.
I assume that is it. I see no more hands. Thank you very much, Governor. That's the last round.
Okay, thank you. I think all those that are asking me about whether the job offer is coming and all that, my view is simple. If it comes, it comes. I never worry about, this is the typical Kenyan answer. If it comes, it comes. I never worry about these things. You cannot worry about things that you cannot change. I worry more about the things that are in my control. That's the only thing that matters. And in effect, in terms of speculating, I have learned that speculation doesn't always lead you anywhere. If anything, it raises your anxiety level. And I do want my blood level to be sort of more or less sane, not spiking every now and then. I could spend all my day next to the phone, waiting for a phone call. That doesn't help. Let me get the work done. There's so much to be done. And even that day I have to walk away from the job, that's fine. It's not the end of the world. The institution will remain. That is what is more important. And if indeed I continue, well, that's just fine as well. The only thing that will be different is whether I'll have I'll see you again in a few months, or I'll not see you again in a few months. But for those that I'll see again in a few months, and those that I may not see again in a few months, then, and this is where your question comes from, sure, let's have a conversation about maybe I should appear in a profile in your paper, whatever it is. Then I can sit and chill with you and you tell me how you saw things, right? And vice versa. I think it's more that than anything else. There's so much work to be done. So much work to be done. It's amazing. But I think it is important to take the long view, which is the institution is there regardless. And that is what is much more important. Okay. So I hope I've answered both your questions. So Brian, also your view. Maybe someday you should have a profile of me in your newspapers. That's probably the better way, and then direct it to Mr. Wallace. Let him see if you're worthy in this regard. But there has been many successes. There have been many failures. There have been many sleepless nights. And maybe one fine day, one will look at this. But this is not the time to have a reappraisal or sort of an appraisal of what has happened. I don't think so. This is the time to finish what needs to be done today, what needs to be done tomorrow, and then take it one day at a time. You asked about interest rate caps. How do we expect to continue pushing in this area? We've been very clear about this, that really the interest rate caps need to go. In effect, anything you could think of, any world that has interest rate caps, or any scenario that has interest rate caps, that world is not the best possible world. So if you are thinking of a framework in the financial sector, we believe that interest rate caps have been, in a sense, strangling the economy and therefore are not appropriate or not beneficial. It's true, we are going a long way in resolving this matter, but we need to do the right thing. We've done a lot to deal with those concerns. You now talked about this product, but I think others have talked about the consumer, the business, or rather the charter, the consumer charter, which is also significant in terms of dealing with consumer problems or the way the consumer is dealt with. That is significant. We've talked about also transparency in terms of what they are charging you and so forth. That is significant. There are many other things we've talked about. We've talked about the CRB. Okay, we are not there, but you can see we've gone a long way. It's there, you can look at it, you can critique it, you can help improve it if there's something we missed. So I think there are many other things that we have done which in effect deal with the fundamental questions that led to the interest rate caps. It's time to remove that thing. It's now sort of an appendage that is, in a sense, whose time has come and gone. Maybe it was the way to force us to get together. By the way, another element here is the way the banks look at the consumer and indeed the way they compete. I made that point in maybe more, in a way that was a bit more funny rather than serious, about the competition, the way competition works. I talked about the example of Eliud Kipchoge and so forth. The point is that we've come a long way. This is the time to actually move on with the business that is needed in the economy. this is the time to, forget all those things and unite ourselves together in this common objective of growing the entire economy. Omar asked about the AML, CFT, and gold. Well, all I can tell you is and you know this, you've probably you've been reporting it, not you as Omar, but you as sector. I mean, the gold scams have been there for some time. They didn't come with AML, CFT things. And I think today it is gold, tomorrow it is something else. The point is you still have the same characters that would rather not work and would rather go for quick solution, quick wins, whatever those wins are. The trouble as everything else, that game, remember there used to be, maybe before you came, there was the Golden Bug crisis, right? The Golden Bug scam. And it was very much the same things. So I think the point here is don't look at it as this has just come to the surface now, meaning it's only been there in the last week or the last month or the last year. They've been there for quite some time. Scammers have been around, right, for, I guess, since the creation of humanity. So I don't think the issue here is to think about it that way, but rather to see what is it that we need to do in order to strengthen the positive elements of our economy. That, to me, is the question. I mean, are there opportunities that are coming forward? Are there opportunities that are being provided to our young men and women? Are there opportunities? Is there a sort of a rule of law? Meaning, if actually I've done something wrong, I'll be held accountable. Is there that sort of level of accountability? Is there that level of accountability for responsibilities that I'm given? For instance, myself as a CEO, is there sort of a way, a mechanism to see, to be held accountable for the things I do, all these things. So I think that is the element, that is the reminder to us. I think there was a time when we were less, you could say, again, going to the running example, where you can say that, I am Kenyan, right? It says so on my passport. It says so on my ID. Therefore, I can run the marathon very, in a short time. You understand that sort of fallacy, right? So I'm making this point to maybe to emphasize that it's not that just because we are Kenyan, we are the best in the region or whatever other label you want to give us, it gives us sort of an automatic success rate in terms of these other issues. No, we have to do the hard work. We have to do the hard work. But that means there are opportunities also for us. So anyway, I hope I've answered your question on this. I talked about your second question. The 20% issue, I think what has happened, look at by the way, I'm going to put out an op-ed on this issue because there are too many questions. So I don't know when I'll do it, but it will be done soon. And I hope you'll publish it in your newspapers because it is significant. It is significant in terms of the way we are dealing with the banks and what we require them without having what I would call directed lending. We still want them to achieve particular parameters. That's really the issue. Yeah, it's true when we put out the draft, which some of you unfortunately thought was the final thing, but when we put out the draft, it did say that there will be some sort of limits, 20% to SMEs and so forth. As a matter of fact, the business in town should be SMEs. And it should be that they understand what it is that they need to do in order to reduce the risk that they perceive from these institutions. Then the rest will happen. I mean, that's where really the growth is. So if indeed you push them in that direction, then the outcomes will be the ones you want. At the end of the day, it's not that we want to say, okay, they've learned 20% or 10 or 30. That in itself doesn't mean anything. The issue is, what is the objective? And I think we've managed to get that objective as is now becoming more and more evident in terms of what framework we are working on. There was a second question there that I missed. I don't remember who spoke after you? What did you ask? Yeah, I get it now. I get it. Yes, yes. I had the question here as who is it? Or who done it? So I'm not sure. I guess here I would say that I cannot mention names. I cannot name names. All I can say is this online lenders, we have not licensed them. So there's a bit of a, caveat emptor, right? Which is really dangerous. And I think this is the issue that we have been talking about for some time. That, yeah, it needs to be regulated, going back to the earlier question. But more than that, we need to deal with them because in effect they are Shylocks. Their behavior is very much Shylock behavior, only on a nice platform, nice app, and with all the things, bells and whistles, or something that is neat. But at the end, some of the elements. I mean, some of you are complaining about the pricing on Stawi, right? And I challenge you. You tell me where you're going to borrow at those rates. And you have much more, let's say, firepower than the guys in Gikomba and all the other places that I've been to recently. But that said, my point was going to be maybe compare that also to what those app credit providers are doing. And it is crazy. I mean, talk to the people that borrow at those rates. Now, it may very well be that the people that are borrowing through those apps are more like our brothers and sisters, right? Our younger people that have less, and who knows, some of that is going into betting. It's amazing how some of our young people are being diverted into this sort of activities that hook them. And so very soon you have a crisis in the home, you have a crisis in the society just because of these things. And in any event, I hope I've answered your question, that I will not name names, but you know enough to know the ones that I'm thinking about. Now, finally, I think on all banks, again, I guess as David asked questions about specific question about a bank, we don't talk about specifics on this. So, and it's the business of the institutions to answer your questions. So I'm not going to deal with that. In terms of the IMF program, remember, or the package. By the way, some of you have, I hope it's not you, David. There was an article recently about this. It was in the East African, which was not correct. Whoever wrote it, I know the name of the person who wrote it. But the point is, it was not true what you said there. So let me tell you what I think is true. And you can compare it. And I hope this shows that I read what you write. Which I think is also good. I need feedback in that sense, and you also need feedback, right? So with regard to the IMF, as I said in April, we are negotiating, we continue to work with them to put together a program that will be a precautionary arrangement, right? So this is a precautionary arrangement, which is really the equivalent of having insurance, right? And what are we insuring ourselves against? We are trying to insure ourselves against significant shocks. And the word here is important, significant shocks that hit our economy. And the only really significant shocks that one can think of are external shocks. Remember, we had the drought recently, a couple of years ago. And even in that context, we did not activate a disbursement or any of these things. So it will really have to be a significant shock. And the world, as we have said, is actually quite dangerous. And we have all these risks that I mentioned. So in a meltdown environment, we would need quick access in terms of balance of payment support which this arrangement will provide. That's the general point. Do we need the money today? The answer, no, we don't. As you said, whoever it was, we do have enough reserves to, 6 months of imports, and we are more than 6 months of imports, and we are, let's say, a non-primary commodity exporter. So think of those that have oil, and it's fine. They could even have 12 months of import cover. But I think the point here is that, yes, we do understand when our reserves allow us to have a good buffer. We also are in a position where we can adjust policy. So we are not, in a sense, in a corner. We can adjust all monetary policy one way or the other. And then eventually, if we still need to adjust, then we'll draw down on, we'll actually activate the precautionary arrangement. So bottom line, yes, we continue to negotiate. There's no rush. We expect that will be completed soon. How soon is soon? It's not in a matter of weeks for sure, because I think every one of us now is all focused on the budget and other, and similar things. I mean, budget is in 2 weeks, right? Or, no, maybe 3, I'm not sure now. I don't know when that will be, but I think it is around 2 weeks from now, right? So I think the point I'm making is, I don't think there is that emergency situation. Will it be good for us? The answer is, well, it is insurance, therefore it better be good for us. But again, it has to be taken in that context. Again, to give an example that will stick with us, the time to insure is not when the house is burning. It is long before the house, is on fire. It's when everything is or you think about flood insurance or any of those things, or crop insurance. It's not when you're having the floods coming through. It is before. It is before. So I hope that answers your question.
So thank you. Thank you very much, Governor. As usual, we'll have the Governor, Deputy Governor, members of the MPC, and members of the CBK staff. Please let them leave, and then the rest of us can do our usual things. So, Governor,
Thank
DG
you.
and everyone else.
Thank you very much.